It's Wednesday, August 6th. Let's level up. Markets are reacting on headlines again. Today, the Apple news took the market up. Apple was up big time. We'll talk about that in a minute. VIX is technically one time framing to the downside, and even though we're trading paint seemingly on a daily basis with up and down moves, the ES is actually one time framing to the upside, and the same with SPY and the Qs. I'd be a little cautious if we got back up over 1741, which is the 50 MA, and if we were to take out today's high at 1788 in the VIX, that could end the one time framing. If we do continue lower, 1623 and then 1570 would be the next downside targets. We have, however, seen the 100 MA cap it, so we will assume it does until it doesn't, because traders do, it works until it doesn't. 100 MA is currently 2132, a fairly reasonable upper end of volatility. As far as the ES and the NQ go, we had that run up post Powell and then the big dump the day after and the follow on Friday. We still have a VWAP from that day at 64.1125, that's the Thursday, and in the Qs that's 23,545.50. So those are upside targets if we do continue to run. In the ES, if it goes to the new channel high that we've been forming, that would be 45.53. And in the Qs, that would be a little less of a move because we're closer at 23,643.5. Generally, I think you could raise stops here. We had been using 63.46 quarter as a pass don't pass line. I think you could use 63.72 half now. It doesn't have to just be that full on move. If that's lost, we likely would check back to the 63.46 quarter to 63.54 half, which was today's rich close, so that would repair it. The apples to apples in the Qs would be 23,305 half to 23,281 half, repair the rich close and the neckline test. I think you could use the 23,465.75 and 23,404 quarter as raised levels that must hold on pullbacks now, though. As far as SPY goes, let's keep it super simple. Bulls are up over 631.54, so that is the must hold. Anything below that, I think, could see a larger liquidation break, probably to retest the 629-ish area again, that 50% fib and 20-day moving average. We are currently a little over the 10 MA, so if you're really Johnny on the spot, you could use 632.39 as a pass don't pass line. Next big upside target I see is the 78.6 of the pullback range, as defined from the 731 high to the 81 low at 635.45. As far as the Qs go, we're over both the neckline at 565.05 and the 61.8 at 565.86, so don't let price get back below that narrow range of the 565 strike. If we can hold that area, I think we can see the 569.72, which is the 78.6 of the range. If we can't hold the 565s, I think we could come down to the 563.16 and maybe, which is the 50% fib, and maybe even the 20 MA at 561.88. Apple obviously got a big boost today with the announcement that Tim Cook is going to add an additional $100 billion investment into the United States over the course of 4 years, so that's $600 billion in total. I also like the idea now that they're going to be exempt from secondary tariffs on China and India, which is fantastic news for them because that would crush their margins. Generally, we got up close to the 214.66 level today. It soundly rejected again, but in the after hours with the press conference, we're up now closer to the 200 MA and close to the gap fill, the 200 MA being 221.19 and the gap fill from 4.2 being 223.89. Careful if price can't hold 219.38, and for sure if it can't hold 214.66. That is now the raised stop, because what was resistance now must be support in those 214s, 215s, really 214.66 specifically. Below there, I think we could even traverse back to the 208.42 level. I am expecting that 223.89 to 225-ish, because that was the 61.8 of the entire decline, I think will be resistance. We were looking for that gap fill on the iPhone launch, but if we get it ahead of time, I'm happy to take it. Last week, we had talked about putting on a trade at the 214.66-ish area, and to add if there was a liquidation break, you were able to get out if you weren't comfortable being in the trade of today at better than break even, and then the add-on was just pure caking. And if you held it, and most of us did, you're going to have a very nice reward tomorrow. I think you could use the opening 5-minute low as a stop, particularly intraday high is lower than the overnight session, which was 221. So bulls will need to get up to those 221 pluses to hold. Anything below the 219.38, be a little bit careful. SMCI got smashed today. I had a 1/2 put ratio on. I had discussed this in November actually, 47.38. I covered it today at 44.98, which turned out to be the low of today because that was the 50% fib of the range. I don't know that that's going to hold indefinitely. Usually we see multi-day pullbacks after this, but I did want to cover it because I was seeing price hesitate down there. We had already come down quite a bit, and I was seeing these bottoming tail hammer pops and pops and pops, and I knew price was going to come down eventually there, and I got filled on a couple of trades, but I do think that there is maybe room down to the 40.78, which is the 61.8 of the range, and maybe a retest of the 4.9 breakout at 37.39, which by the way is why I use that 38 as the lower strike, because I'm comfortable owning it down there. If we can get back up over the anchor VWAP, which is just above us here at 48.49, there's a very good chance that we can have a fib retracement of the range using yesterday's high to today's low. I would think at least 51.53, which is the 38.2 of the range, and maybe 53.59, which is the 50% fib of the range. I'll assume it's the 38.2 though, because the market took this down quite a bit and their report was rather weak. I've said before, I'll say it again, NVIDIA is the better play out of the SMCIs and the ASMLs. It is consolidating very nicely. I think you could use the 10MA at 176.80 or low of day at 176.25 as a hard stop now. On the upside, if we were to keep going to the yellow channel high, and if we did it tomorrow, it'd be 188.90. My guess is the bulls are going to try to make a run at 200 with this, but if it can't hold the 10MA, be a little bit careful because there could be a liquidation break. And we have seen resistance in the 183s, 183.30 to be precise. Microsoft still pulling back, but doing it in a gingerly fashion. The 20MA is the first real big test at 513.55. If that fails, the 50MA could be in play at 493.18. If you want to do a 1/2 put ratio playing for that in some kind of near dated strikes, I'm good with that as well, as long as you could get it on for either a small net credit or zero. Meta still holding gains fairly well. Nice consolidation here. We had said anything that held 740.91 was fine to the upside, but the bulls there really need to get over and stay over 781 and then 784.75 to see the 2.618 at 824.06. Netflix rallying a little bit early, not surprising given the strength in the tape. The 20MA has been the resistance at 1202.79 and falling. I've been looking for it to retest the 1121.45, which is the 2 times range on the downside, and maybe even ultimately the 1064.5, which was the breakout. Remember the failed double tap head and shoulders? That would be the perfect retest. If you want to do a 1/2 put ratio playing for that, getting it on for zero or a small net credit, I'm good with that as well. As far as the Bitcoin goes, still pulling back, chopping. We're right on the yellow channel low. It's got to get over 115,635. And then it could continue up. I would say the 20MA is near-term resistance at 117,611. But here's the question, why isn't it pulling back more aggressively? It's sort of like this stair-stepping down, like we're seeing in the Microsoft, like we're seeing in the Netflix. The 112,345 to 108,960 area, I think, is the first key real support zone, and would be a right or right out by the dip area, particularly with the 50MA right in there at 111,372. Generally speaking, gap ups have been getting sold into, so if you're long, use opening 5-minute or even 15-minute lows as a stop. Anything above that 5 or 15-minute range high, 15 in particular for longs, I like on the upside. Anything below it, I like on the downside. Be careful for just doldrums chop. If we have a lower high in the RTH session and it can't eclipse the overnight high, the chances of the liquidation break increase. Like and follow for more.